Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the euro currency. So you can see why in fact I told within the current week almost every day that the overall choppy price action is rather difficult to trade, and that's why I prefer to avoid it and wait for the clear confirmation from the market, because my experience tells that it's no need to be hurry with this such sort of the actions, because when the market exits from the consolidations from this choppy price action, usually you will get a significant period of time to make the decision, but your context, your understanding on the overall situation will be clearer, and that will let you to enter with a more reasonable position than you try to take the position somewhere inside of this mess. Well, what we in fact have with this overall action, so we see that accelerating to the upside, plunge down. It's really bearish engulfing. Again, new attempt, wash and rinse of these highs, again, strong move down. Here is the multiple stop grabbers in opposite directions, but overall price action stands inside of this black candle. And yesterday, again, sold off. Significant move that in fact engulfs overall price action of the whole week. And what is more reasonable, that we got also this 2 days bearish stop grabber. Move to the upside, fast return to the downside, trend has shifted bearish again. Well, market moved below the weekly pivot point and has reached the weekly pivot support one. This significant sell-offs on the market looks really important, because they do not allow market to grow and hold market from the possible upward appreciation, upward move. Well, and I think that this move probably will continue to the downside. Yesterday we said that until market will erase this trend line, will break this trend line to the downside, take out of this low, erase this stop grabber, and in general this consecutive of the high lows, we could not start to talk about the bearish development. But that has happened, and now we have to look for that perspective as well, because you can see only yesterday we had no reasons to speak about the bearish entry, since we had the bullish trends on the daily time frame and the lower time frames. We have the bullish engulfing pattern, bullish stop grabber, we have the trend line here, and the overall context was more bullish rather than bearish. But currently we see the drastic changes. So in fact this plunge down erased all the setups on all the bullish patterns that we had previously on the intraday charts. Still, this situation is not as clear as we would like to see, because from the one perspective that could be the continuation to the downside, sell-off trend has turned bearish. From another point of view, we could get the godless 222 That's first up, ABCD retracement, market in fact would move to the upside. But here I would like to take a bit extended view and take a bit anticipated view in our weekly research. And if you will take a look at the weekly time frame, you'll see that we will get the bearish stop grabber on the current week. And this pattern suggests the taking out of these lows. Also we have daily stop grabber, 2 days stop grabber, but in fact it already has reached the target. The target is the mean of the previous extreme low, that's right here, and market already exceeded it. But the weekly stop grabber takes the special role, because it will appear right at the top of the right shoulder of the head and shoulders pattern on the weekly time frame. And in fact that pattern could become the triggering pattern for the downward action that hardly will stop right here, because the neckline of the head and shoulders is right here. It has a bit some slope, but this is the starting point of the right shoulder. In fact, that action is the right shoulder on the weekly time frame, and that is the weekly stop grabber, bearish stop grabber right here. That's why currently, so if we take into consideration all this mess that we see already within the 2-3 weeks, this market in general here looks heavy, but every time when it exceeded and shifted trend to the bullish side, shows the stop grabber, that was some thoughts and warnings about that market probably could continue move higher. Also, we had this rising wedge pattern that also suggests some bit more leg to the upside. That's why, as I said, I do not like to open the positions when the market acting is in such a manner. Well, but currently I think we could start to think where we could enter short, mostly due to the weekly setup, not only due to the daily time frame behavior, but mostly due to the weekly time frame. And currently we could take a look and make the preliminary trading plan, what we could expect and where we could start to think about short entry, what is the suitable level for watching as the potential level for entry on the bearish side of the market. On the 4-hour time frame, in fact, I did not see anything interesting. So as you can see, trend line has been broken. Okay, market now stands in the support cluster with the weekly pivot support 1 and monthly pivot point. Market also has erased this butterfly that we have discussed. Well, it's really significant move down. Now it bounced up as the retracement from this after this plunge down. Also, market has erased and destroyed the confluence support area that was here, since market now stands below this level. Well, trend has turned bearish here as well. Well, I think that currently we could stick with the double repo pattern that now is forming on the hourly time frame, because here I think that the more or less suitable level to watch for, especially because we do not have any other beacons for that, will be this trend line. Maybe market will make the return up and retest this area, then could continue move to the downside. From that perspective, this pattern is the pattern that we would like to get, because the minimum target of the double repo buy is the 50% resistance of the whole double repo thrusting move. That resistance stands very close to the trend line that has been broken by this plunge down. As you can see, really significant move down. Probably a lot of stops were placed somewhere below this line, and market has triggered it. So that was really a fast move. Well, double repo pattern now has been confirmed because this candle has the close above the 3x3 line. So we have the close above, close below, and close above again. So double repo has been confirmed, and we could keep a close eye on it. As usual, you could trade it differently. So if you would like to make the scalp long trade, I have not any objection against this. So that is the confirmed directional pattern. You could try to take the long position, as usual with the stops below the 618 support of that move, or even below the low of the double repo pattern with the target around 131 area. That's the 50% of this move. That is also the trend line. That's if you would like to enter short, that's the area where you should watch for the sell signals, because market could retest this area and turn to the downside. That's the first area to watch for. And the second moment, that also exists the possibility that that could be a double repo failure. So if market will fail to continue move up, turn that to the downside, and will show a significant move lower, that will be the double repo failure. That's also the directional signal, but on the bearish side. In this case, I can't exclude that the market probably will proceed right now to the 618 support and will take out of these lows. It's 129.34 area, next support area. Well, that's the trading plan for today. But be careful, since today is the Friday. It's not no need to be very hurried to trade this setup, because we now have got the initial hint from the market that probably the downward action is more probable. We have the long-term pattern on the weekly time frame that give us the freedom in terms of the time and in terms of the space on the market that let us to make the reasonable entry, and we do not need to take the first sign that we could get. Well, that's why we could even to wait a bit and to make the reasonable decision. I think that we will be in time with the trading of the bearer setup on the weekly time frame, because it has extended target and it develops within an extended time. Well, but still, that's the pattern that we have on the hourly time frame. You could try to trade it. If you're watching for the entering on the short side of the market, that's the level to watch for. First of all, this area, it's 131. Small market could retest and continue move down. Second, keep an eye on the potential double ripple failure pattern. If it will happen, that be ready for moving at minimum to the 129.35. That's 618 support and taking out of these lows.